So hello everyone, and welcome to the session on trading technology, keeping a pulse on what tech has to offer. So we have renowned panelists on our panel today, and I'm pretty sure we will all have interesting session on the subject. Hi, my name is Jigar Pandit, and I would be moderating today's sessions. Let me introduce myself. I'm working with Sharekhan, one of the India's biggest broking house in India. We offer right from equity to commodity to currency and everything. Basically, I take care of the commodity, currency, and algorithm trading part on Sharekhan. I'm with Sharekhan from last almost 17 years and broking experience of more than 25 years. That is basically on the sell side. And I'm part of the commodity derivative market since inception in India. With this small brief, I would like to welcome the panelists and would like to introduce each of them. So we have with us Ian, CEO of Digitree. We have Nacho, Managing Partner of BP Ventures. We have with us Tom James, CEO and CIO of TradeFlow Capital Management. Welcome, gentlemen. And I'd like to request you to introduce yourself. Can we start with Ian, please? Ian, can you please introduce yourself?
Sure, thanks, Jigar. So I'm Ian Murray, I'm the CEO and founder of Digitaire. So we are a software house building custom front and middle office systems. So trading, pricing, risk, algo systems, algo control frameworks, and sort of venue connectivity. So working throughout the entire life cycle, really, the front and middle office in trading organizations, be they energy and commodity traders, our esteemed audience listening today, or they're banks, hedge funds, and asset managers. So a lot of experience both from the banking world, so low latency, high frequency trading in that space, particularly say in FX, as well as building algo systems and algo control frameworks for many of our clients in the energy and commodity space. And we've been around 21 years.
Oh, thank you very much. Nacho, can you please introduce yourself?
Of course, Jigar, thank you very much. So my name is Nacho. I'm a managing partner in the BP Ventures team. I've been with BP 20 years, started in refining, and then spent 12 years in the trading floor with BP, mostly in origination role where I was for about 10 years. Where I am today is in BP Ventures, in the venture capital arm of BP. And what we do is we invest we take equity stakes, non-controlling equity stakes in startups to bring the innovation that is happening outside BP to our business units. And that includes trading technology, work with startups that are trying to change how commodities are traded today and bring those to work with the BP trading floor so that we can co-create things that are just bigger than the startup working on its own and accelerate the way we optimize or accelerate the transformation that we are seeing in the industry.
Excellent. Thank you very much. Tom, may I request you to introduce yourself, please?
Oh, thank you very much indeed, Jigar. Hi, yeah, my name is Tom James, CEO of TradeFlow Capital. I've been in commodity trading and investment for 30 years now, and both in banks and also in producers of commodities and working with some governments. So always been looking at trading technologies, both from a speculative perspective, but also from how to apply also in risk management, both in the physical commodities themselves, as well as the financial markets.
Wow, great. So today we have a very wide experienced, expertise people, right from data to physical trading to, right from the oil market. So I think we will have a lot of interesting insight on how the market is doing and how the technology has evolved over a period of time and how it has helped in growing the market. So friends, as a part of broking industry for almost more than 20-25 years, I have been actually the witness how the technology has played a critical role in changing from trading dynamics, be it equity, be it currency, or be it commodity. So right from outcast system to online trading platform to client trading through the mobile, there's a drastic change in how the trading methods or how the trading has been taking place nowadays. So if you see in nowadays in today's technology era, which is growing rapidly fast. One of the important things is the algorithm trading, machine learning, artificial intelligence, and so on and so forth. So let's understand from the experts how the technology, what technologies can be offered, for the trading into commodity market especially. So first, Ian, I would like to come to you and understand what type of data basically require for someone to either do some sort of algorithm trading or AI or machine learning or something.
Oh, thanks, Jigar. Yeah, I think the answer to that question depends on what sort of trading they're trying to do, obviously, and what models they're trying to build. But in broad sense, what we see is organizations looking to add, increasing amounts of what we might call alternative data sources. So if you were trying to model for renewable sources, you might be looking at micro weather forecasts as a very good example. But you might also look at sentiment data. Twitter data is a classic one. So you're trying to bring some very structured data, such as, for example, generation output you might get from a wind farm or a solar cell. You combine that with less structured data and perhaps very unstructured data and bring it into your pot of data, call it what you will, your data repository. And the challenge is there not so much just what sort of data, but how you describe it. Because as the building of models is becoming more prevalent, we work with organizations, who use data pervasively throughout their organization. So the challenge is then not just what sort of data, but whatever data you've got, is how you describe that data in a way that is meaningful for the other stakeholders in your group. So one platform we built, for example, a market data analytics platform, you can ingest terabytes of data, great, but you've got to describe it. So you've got to build a schema per data source, and you might be building out time series from multiple data sources. And then you've got to share that with others in the group, because we're seeing not just the quants want it, but the ops guys want it, the risk guys want it, the more traditional traders want it. So they've got to understand that data well in order to then build models. And then the models themselves need to be described in such a way that hopefully you can iterate. So I might take your model and say, well, I think I can enhance that. But to do it, I've got to see the model, I've got to understand the model, I've got to know how it's made up, know what data it's pulling upon, and then enrich that with additional, perhaps, data sources and different parameters. So I think the answer to what sort of data is, lots and many and varied from structured to unstructured, and that's increasing all the time. I think the bigger question to me is, once you get hold of that data, how do you handle it? How do you optimize for that? And how do you do that for an ever bigger constituency in your organization? Some of you have got very large organizations, so that you try and make that a more industrialized process where you can repeat it, you can understand it, you've got auditability on the data. And frankly, you've also got an understanding of what you're paying for the data, because it's fine to go off and buy many, many different data sources, and there are many available, but the cost of that is not cheap. And sometimes you're buying, it could be an index, it could be an alternative data source from source one, and you'll find you're paying twice because you're also getting it from source two in some sort of data package. So being clear about the quantity of data, the quality of the data, and the money you're paying for it, because that's part of your ROI. So I think there are a lot of factors beyond what sort of data, but the answer we're seeing is many and varied, and it just depends on what you're modeling for.
Yeah, I think, Ian, you rightly pointed out that what data you basically want has to be very clear. And second point is, of course, the cost which is involved in sourcing those data is huge. So if you're not clear on what type of data you basically require, you would end up paying something which basically you never required. So it is very, very critical and important that you need to be very clear at day one at what basically data you require. Yeah, that's true.
Yeah, and I think we look at it in terms of, and to be fair, we borrow this from a client, but a data economy. So in an organization, you're always shifting money around the place. You know what money is, it has a value, you can FX it. But data traditionally doesn't sort of have that same exchangeable, tradable value, but it needs to have, both inside an organization and outside an organization. And in a very ideal world, you have an understanding at a very granular level what each chunk of data or stream of data is worth to your organization, because that's how we run organizations now. Somebody made a very good analogy about large organizations. They're rather like large car manufacturers. They don't make the seats and the switches. They don't even make the engines in many cases. They buy the components and pull it together, and they produce an outcome. Well, to some degree, that's what you're doing in the trading world. You're bringing data sources in, you're bringing building models, you're buying black boxes, and you're putting it together to get the outcomes you're looking for. So that is a very collaborative and cooperative endeavor. And you're trying as a team to improve the levels of collaboration and cooperation. And technology, from my perspective, we don't build an algorithm, we don't write the if you like, literally the numbers in order to do the calculation. Generally find clients want to do that themselves because it's IP. But there's so much around that. There's so much about the control of that, the connectivity, venue connectivity, the lower latency, the algo control frameworks, just the sort of robustness of the infrastructure before you even get to the human factors, like how do I share it? How do I describe it? How do I evolve our ability to do that better? So they're the things that I personally find very interesting.
AI has been useful for physical market trading, and how it has changed over a period of time, because you have been in this industry from last so many years. So what has been evolved?
Sorry, was that a question?
So it's a question to Tom.
So what's involved? Well, I still remember my first future source system, which was receiving data through an FM aerial on the roof. Every time there's a thunderstorm, we get suddenly a big spike in oil prices, you know, and be cleaning the data up for weeks. So quite a bit's evolved, I should say, from you know, receiving your weekly chart pack printed out through the post to FM data transmission. So no, well, I think it does come down to data, as Ian was saying, and I'm glad that he mentioned about alternative data, because I think that's perhaps the biggest evolution, is the fact that you know, we're no longer just looking at algo trading on price, you know, sort of high frequency. You know, a lot of people think of algo trading as high frequency stuff, where you know, a lot of what my firm is doing, and we're looking at physical markets and helping our customers move physical cargoes and try to evaluate their risks better. So, you know, what's most exciting, I think, is the digitization of the physical commodity market. So all the freight and the contracts and the customs data and all sorts, you know, weather data information, all of this alternative stuff, which is not pure financial economic information, which now you can really get hold of and throw into the bucket to really put into the mix of looking at algo / machine learning AI type sort of modeling.
Oh, okay. Thank you very much. So, am I audible?
Yes, can hear you.
Yep. Okay. Thank you. So, Nacho, a question to you on what, continuing to what Tom has said. So, has BP Ventures invested in algorithm trading? And if no, why not? I mean, what's the reason? Because now the trend is more of algorithm trading, AI trading, machine learning, and so on and so forth. So, do you see it is interesting so far as trading is concerned, and it makes more sense, you know, other than, you know, going for a manual trading, go for more for algorithm trading because of a more disciplined trading. So do you see a future in that?
So let me start. We haven't invested in algorithmic trading. We haven't invested in a startup that helps us with the algorithmic trading. BP trades to optimize the supply chain. And so far we haven't seen the reason or the need that will change how we do things. Having said that, commodities trading still hasn't changed or hasn't been transformed in the last 40 years. We're still doing things in a similar way. We've seen a lot of incremental changes, slowly improving the efficiency. I mean, we don't have a spike in oil price every time there's a thunderstorm, Tom. But there hasn't been a transformation in the same way that we have seen with the digitization of the FX market or the bonds or equities, right? So we haven't invested in algorithmic trading. Will we invest in the future? Potentially. We are on the look for new disruptive technologies that we think can accelerate the change that, well, we have already seen an acceleration in change in the last 12 months with the pandemic. But we will keep looking. We will be exploring partnerships, investments, support, and potentially in the future. I mean, AI, ML, all the technologies that support algorithmic trading are changing and growing very fast. So yeah, it's a bubbly space that we will keep looking and potentially at some point in time invest.
Yeah, so will as an industry player, we'll certainly looking forward for BP entering into the algorithmic and AI trading.
But it always be at the service of optimizing the supply chains that we have from upstream assets, and upstream not only oil and gas but also electricity, to supplying the commodities or what the customers demand.
Yeah, I mean, algorithm or AI or machine learning also brings in a lot of advantage in terms of the trading, that you will have specific sort of a discipline. You don't have emotions as a part of the trading. So all these things actually eliminates when you come to the automation of the trading part. So I think there are a lot of advantages moving from manual to the algorithmic trading. Yeah, so let's see. So coming to Ian. So as you said, that a lot of data and understands, but then what are the ways to filter those data for automation or for automated trading? What are the ways? I mean, how do we filter? So we have a lot of data. How do we filter those data?
Yeah, sorry, it's a good question with not a simple answer. I think in a sense you're looking to quality of data, and what's your tolerance for a lack of quality. So you might be looking at stuff where tick data, you're willing to drop a few ticks because it's about a stream of data, but there might be other where you need a very rich and complete data source, and you use that to train, for example, an algorithm and make it make sense and back test it. So I think the answer is, in a sense, what are you willing to compromise on? So there's an element of, if we stand back, you could put algorithmic trading into two camps. The one that everyone thinks of is effectively it's going to make me more money. So it does smarter things than I could do or you could do as a trader. So it's AI, and the thing in theory is sort of trying to divine value out of the marketplace that you or I couldn't do. But a lot of it was also about doing the steps that one might otherwise do if you were very good on spreadsheets and you've got the time to do it. So, moving average trade prices, etc., and channel breakouts and that sort of stuff. So there's a lot about just automating human processes to reduce operational risk and make your lives easier, perhaps reducing sort of psychological stress on the individuals, so they know stuff is going on in the background that you don't need to worry about, and then you can focus perhaps on higher value things. I still think there's a lot of value to be had in that latter camp, which is just automating otherwise human processes, but to do it in a way that is very reliable, is very robust, is very controllable. And for an organization that's making money in that space at the moment, your opportunity is to make more money perhaps on an operational risk adjusted basis without really changing your market risk profile. So I think that's the first place for many organizations to focus on, is automation, which one of you touched on earlier on, is part of the sort of digitization, digital revolution. How do you take the stress and strains off individuals by making things that need to happen, we know they need to happen, making sure they do happen, have controllability, you have visibility, you have predictability. And those are the bulk of the existing trading operations, just doing the same thing better and smarter and smoother. And then there's the side of saying, okay, but can we make more money? Can we do things with machines that we can't do already? And I think you're into the world then of quants typically building models, backtesting models, and taking, if you like, a hypothesis, saying, I'm going to try and extract some value from that. Is that value justifiable? And, within what constraints does that hypothesis still stand? And that's going to always be throw some stuff against the wall. And within that world, I think what you're looking for is you get the best quality data you can, certainly. You probably get, in many cases, as broad a data set as you can, and you build your models well. And by that, I mean, you do build them, you do backtest them, you try and expose them to others in your cohort who can perhaps interrogate them, evaluate them for you and with you, and build off them and iterate them. So all of that collaborative work we're talking about, which is a lot harder than it looks, because I think quants quite often like to hold their IP in their own purview rather than share it with others. And then once you've got that sort of knowledge being shared and exposing it to the light of truth, saying it's working well, but can we make it work better? They're the areas that you can start to explore and try and make some more money on and do things which hopefully are better than your competitors, but in most cases, they're trying to do it too. So I would definitely break it into those two camps, and where technology can help dramatically is the first camp. It can systematize, in a classic sense, those processes and activities that should be happening and are happening and just do them better and make them more visible to people. Move away from the old world of trading shit off straight in spreadsheets. Just got to stop doing that stuff. And then on the other side is it also then allows you and gives you perhaps a mandate internally to spend time trying to divine value out of the marketplace, as we've described, with more sort of esoteric algorithms. And to do that, do it on a step-by-step basis, but make sure you have great connectivity, you've got great controls, and you have got, to some degree, a big fat red stop button if you need to and it goes out of control. So build controllability into that, but then almost a sort of sandbox for your smart quants to try and divine value and make progress for the business and hopefully explore the marketplace.
Yeah, that's true. So certain points like fat finger errors and something which needs to take care when you are more into automated trading. Tom, a question to you. So how AI or ML has taken over a decision of making into physical market? So have you experienced that or AI or ML is actually helping making a better decision in terms of the trading into the physical market? And what are the things to consider from the regulatory perspective? You can just throw light on it.
Sure. Yeah, I mean, I'll come back to the regulatory perspective, as that's quite mixed depending where you are. Physical markets a lot of the time are out of scope themselves, but it's very interesting, certainly in the bulk commodity markets where we have futures markets, active swaps markets, and a lot of data. We've already been doing quite a bit of work around being able to initially look at guidance from the paper markets, the derivative markets, using algo systems to trigger decision making around physical cargo. So sometimes in a physical market, you might have some optionality around when you take delivery, when particularly your pricing window or pricing dates are. You can maybe slightly move it forward or backward. And sometimes there's some optimization there that can be done. So although you may not actually be executing paper deals, you're able to use that data still to try to optimize your physical book. And then also some automated hedging scenarios as well. So it's not just about speculative trading, but also about building models that can also help in terms of execution of hedging and risk management programs. And I think, as I mentioned earlier, the most exciting thing is just the closer to real-time data now available through satellites, etc., about physical movements of cargoes and things and weather, which is now getting us to a point where we can actually practically use sort of predictive analytics. So I think we're starting, it's still very early days, but we're on the edge of more deep learning AI potential, where risk managers, for example, in big commodity trading firms will no longer be reacting to the headlines of, oh my goodness, what's going on, and trying to fight fires, but actually the AI systems looking at that alternative data, the sort of, the non-economic financial data, but the real world data, and saying, hey, there's some causality here. So we're calling it causative AI, where you're actually at a portfolio basis looking at causation rather than just correlation between assets classes. So that's a lot of qualitative data, not just quant data, but then also something happens, some news, TV headlines is interpreted, and the AI is able to push forward some scenarios saying, hey guys, you might need to look at this. There's something going on here in the real world, and here's some potential scenarios based on what had happened before. When something like this happened, you may need to actually take some preventative measures. So actually trying to take risk management to the point of, well, you're taking action before the problem actually has really come to fruition yet. So these are the exciting things, I think.
That's true. So yeah, so you rightly said optimization, and certainly so backtesting and then optimization is also one of the key for automated trading. So when you do the backtesting or optimization, it also includes the duration of the data. So are you taking the more longer period data, or you are taking the short data, and then that also helps in taking the decision on the trading part. Yeah, so coming to you, Nacho, the question to you is, what other technologies are you seeing that could change commodities trading apart from, either AI, ML, or something of algo? So anything that new which you foresee that can actually help commodities trading?
Yeah, I wouldn't say anything new, but new is a relative concept. 12 years ago, we didn't have remote sensing to the extent that we have it now. For example, what Tom was saying, right? AI was in its infancy. Machine learning was basically what we're still evolutioning. Deep learning was still a concept almost, right? So I think there's a lot of technologies with a huge potential, all of them coming to maturity in parallel. Remote sensing, AI, deep learning, we've talked about that. Distributed ledger technologies, okay, outside Bitcoin, how can blockchain change commodities? Can it? Maybe is it the right one or is it not the right one, right? And then if we look forward a little bit more, what is today in its infancy? The likes of quantum computing, right? So how is that going to affect? So if this is the change that we have seen over the last 12 years, the next 12 years are going to see a total transformation. So these technologies are changing every other sector. So they're going to come to the trading sector as well. And for some reasons, maybe because it's a bit more, what would I say? Maybe the volumes that we move in commodities are smaller than what it moves in FX or in bonds. And maybe that's why the sector feels a little bit outdated today and in need of a transformation. Things are bubbling. I'm totally convinced in 10 years, when we look backwards, we will say, oh, can you remember the days that we used to do things like that, right? And we'll have to exchange a physical paper with someone or a PDF on an email, right? So a lot of possibilities that are going to come to head the space in the next, I would say, 5 to 10 years.
That's great. So I think my next question, more or less, you have, Nacho, you have answered, but the question is again to Ian and Tom also, that where do you see AI, ML or algorithm trading over the next 5 years? Will it take over? I mean, how do you see the growth? So it's for Ian and Tom both.
I think a very good question. And both Ignacio and Tom have touched on different scenarios. So Tom talked about optimization, for example, of physical parameters like delivery. And machines do that very well. Where you've got known parameters and you can optimize for those known parameters. They do that way better than humans do in most cases. So where you can automate, because this whole process really comes under the sort of headline of automation, digitization, where you can automate those processes, do it. Because why wouldn't you? It takes off human mindset, they focus on something much more interesting, much more valuable, reduces risk, blah, blah, blah. And then you've got some other stuff such as predictive scenario generation, which I think is a little bit in the future for some people. For others, it's more real. You think of the military. The military's been wargaming and scenario planning for years for obvious reasons. So if you can get machines to do some of that and then surface possible scenarios and attribute to that the likelihood of percentage outcomes, then you can start to do some of the thinking that humans should be doing or do, but it takes time. And again, you can automate some of that. But the final decision in that case is likely to be still a human overlay that says, okay, we're going to take option B, but it gives them things to work with. So it probably makes a human team more efficient, more effective, less reactive. And those things I think are hugely, hugely valuable. Again, because you've got the sort of cognitive load on management teams, particularly if things are getting quite heated, then you want to be able to give them workable scenarios to choose from. And then, Ignacio's point about, if you look forward, start with looking back and say, well, 10 years ago, where were we? 10 years ago, 10 years time, where will we be? I don't have this view that, the cyborgs are going to be running the world, because in essence, all this stuff is a statistical approximation that someone's got and applied a statistical set of process to a bunch of back-tested data and saying within that, the likely outcome, if I saw that again, is A or B or C. So it is a set of approximations, but the approximations get ever better as the modeling gets better, the data sources get more complete, and sensing, Ignacio's point is really spot on. It's like the world has become almost a digital twin, for want of a best way of putting it. So the likes of the engine manufacturers, GE and Siemens, have been building digital twins for fixed engines, for other machines, but we're sort of creating digital twins for the physical universe. And I think that's the extraordinary thing. Then you combine that with cloud technologies, basically ingestion, storage and processing of that data. So I think that's just going to continue. You can't move anything anywhere without some sort of digitization of that data. So that's giving you ever more data sources to do all the things we've talked about. So then the engineering becomes quite a challenge, but the likes of Amazon and Azure are very kindly offering us phenomenal services and capabilities to be able to deliver value out of that very quickly, Snowflake and others. So I see more of the same. I don't see a quantum leap. I think quantum computing, I don't claim to know lots about it, but I think it's going to have very finite applications in the beginning, but at some point it'll become pervasive. So I see really what you're trying to do as an organization in the way that when we build software, you move from the old world of waterfall, which was a deterministic view, to an agile world, which is thinking in an agile mentality. It isn't about a dictate of this is agile. Agile is a constant process of informing and then basically course correcting based on that information. I think what you're looking for with organizations is the same mindset with automation and I'll say algorithmic trading, but automation of the trading processes in the trading life cycle. It's with a mindset that says, how can we do that better?
Thank you. Tom, anything that you want to add on this, or we can move to question and answers?
Oh no, I think Ian's made a fantastic summary there of things. Nothing to add on that one.
Okay. So thank you very much, gentlemen. I think we still have 7-8 minutes, and we can quickly take a few interesting questions which our audience has, posted. So first question, I would ask Nacho to, if you can address to it. So I'll read out the introducing new solution and technologies in energy trading is quite challenging. So traditional investors don't feel comfortable in the space, and companies like BP Ventures that do have the necessary background and experience don't reply to approaches by small innovative companies. Presumably they can expect larger companies that already have are revenue generating. How does the industry do a better job supporting to new technologies comes to market to make the dramatic shift in innovations? Transformations needs to be embarrassed by the big players. So
that's a very good question, Greg. I would say let me start by saying we don't always invest in companies that are already making revenue. We go early Series A, late seed quite often these days. The BP Ventures receives something like 2,000 to 3,000 approaches every year. And based on that, we invest in maybe 10 companies, right? So we see a lot of things that will have to filter very quickly. To be honest, when I receive an approach from a startup, the first thing is this aligned with what BP is trying to do? And transformation is embraced, but we don't know what we don't know. So what I would say is this wowing me, right? So is there a wow factor here? Like, look at what they have thought here is something that nobody has thought before, right? Do they need BP or do they need the whole industry to move together? And on the commodity trading space, it's interesting because we have a concept of fintech or clean tech or health tech, but we don't have a trading tech. Trading tech is something still very niche. There's no accelerators that I know of, at least. Maybe someone can correct me, of trading tech. So there's no incubators that are trying to work with the startups in this space saying, well, this is how we're going to address these issues that the industry today has, right? This is how we're going to try to target this transformation. We need a bit of thought leadership in the space to create those startups that then can drive. But I am open all the time to receive opportunities and say, hey, we're thinking of doing this or developing this. I would like to see a sort of an MVP, a minimum viable product, something that I can talk to the trading floor and say, look at what we have here, right? Is this an innovation that we can support, nurture, grow with it, right? And take it to the next level. So it is true, there's some barriers, but I wouldn't say that we are too conservative or we are too slow. We are happy to engage in the conversation and try to see how we can move this forward.
Okay, thank you. Next question, probably Tom, if you can answer. How does one link AI or ML? Is there a scope to leverage this new technology more than the existing system, because you are more also into the physical trading? And so if you can answer that.
Oh no, happy to answer that question. I mean, it's a good one. We have our own CTRM system, and as I said, the interesting thing is that now with much easier access, as Ian said, to much more powerful computing on the cloud, but all the sort of cloud-based services even offer a lot of AI and other sort of programming and services, which is great. So even as an SME, you can get access to stuff which you only dream of even 5 years ago, very cost effectively. So plus all this extra data from the physical real world that's much more accessible, means that we are literally plugging AI systems into the CTRM, both to read data. So of course we are, despite everyone pushing for digitization, we still have a lot of paper going around the world. So we've got AI systems that read that paper and at least enable us to actually capture more of that information as opposed to it just being stuck as a PDF somewhere. So that's already a transformation to be able to then interrogate that and throw that into machine learning to look for patterns or look for interesting facts that or optimization opportunities which we would have otherwise just missed. So connecting with CTRMs is about also getting more data into our data stores, our data lakes, which was a conversation a few days ago in the conference. And now, looking at then the portfolio optimization. So one is using AI to get more data in, and then with that data, looking at causality, not just correlations, and I think portfolio optimization is probably where we're at the moment. And then, as Ian said, with more and more of that data, you can start then looking at the juicy stuff, as you say, the exciting stuff, or sort of predictive analytics, both from a risk management perspective as well as the trading side.
And Tom, just to build on that, and also Ignacio's point, the question that one of the audience said, I think there's a real gap here in the market, because effectively what big companies do very well is they industrialize processes. So BP, Shell, amazing at it. What very small companies do is they're brilliant at innovation. And the trouble is the gap between here's a really brilliant bit of innovation and here's effectively the broad scale application of that is huge. And it takes an awful lot to take something from an initial idea, an MVP, even past an MVP, into a productionized version, to take that to work for not just one large company, but if you're going to do that for products, which I guess Ignacio, to some degree, that's what you're looking to back, is things that have a broad scale. Having done that myself, we built product companies as part of Digitaire. We built them up, run them, sold them. It is a totally different mindset to go from step one to an MVP to productionization for client 1 or 2 or 3 to then to get 50 or 100 clients. And I think the market doesn't service that well. And organizations like ours fill some of that gap. So if you've got a workable product, we can take that, and we're very good at integrating it as part of a bigger solution in an organization like BP. But I think that's one of the problems, that slows down progress.
Okay. So thanks, panelists. It's been great. Well, we are not yet done talking about trading technologies yet. So please join us now for the further discussion, and we will have another questions, or probably we will have more discussion on this topic. For those who hold a suitable event ticket, the link to the access to this roundtables is in the event platform. As soon as you enter, please join the area that seems the most appropriate to you, and start off the conversation on how technology can give you an edge as a trader, and how trading desk might have to adapt in future. It's a unique opportunity to exchange with your peers, so don't miss out, and see you there at the discussion panel. Thanks, panelists. Thanks again, and let's meet at the discussion session as well.